outside. Nigeria, of course, has new leadership in place. We're waiting for a new cabinet. The business environment, of course, waiting for the policies that are going to put it on the path to prosperity. One of the things we're going to be discussing is how to utilize subsidy savings. We've got a whole laundry list of other items that we're going to get through. And joining us to do just that is Kayode Omosebi. He is the founder and CEO of Cedar and Ash Capital. Kayode, good morning to you. Thank you so much for joining us. Great stuff. Okay, so you are part of the business environment, obviously, doing business in Nigeria. You've witnessed, of course, this new administration that's in. So we've got a number of points to go through. The fuel subsidy, of course, we know that was removed during the inauguration speech of the president. How can these savings be utilized, do you think?
Okay, thank you. So, the first thing is to look at the problems and what removal of subsidy has cost. Long term is good, but immediately it has its challenges, right? One of the first challenges is poverty. There's the estimate that says last year 4.1 million Nigerians were pushed to poverty. And with what's going to happen this year, the estimate is that we have about 7 million Nigerians that will be pushed into poverty. So consumption is very key, and there's a need to support the vulnerable Nigerians in terms of how they can, push consumption and meet their basic necessity. You also have the business environment who also suffer from margin compression, cost of borrowings, and losses in profits. And so the question would be, with all the savings that you get from removal of subsidy, what can you do? For us, there's two sides. One, in terms of protecting the vulnerable, I think it's time for us to start looking at social programs. Social programs in Nigeria is quite low when you compare it to other African countries. We have BVN, we have bank verification, we have KYCs that you can use to actually meet those vulnerables, and you can take advantage of mobile money operators in terms of meeting their demands. It could be from conditional transfers on a monthly basis to those people. On the business side, what government has done wrongly in the past is to intervene by funding businesses, and it's quite wrong. The government has no business funding, guys. What you need to do is to use the savings to unlock capital into the economy. So creating a vehicle, right, that sort of de-risk investments in Nigerian businesses would be a better way for you to support the businesses. So if you have a fund called, let's say, a subsidy savings fund of, let's say, 5 trillion, and you are de-risking investments coming to Nigeria. It could be diaspora, it could be foreign investors in certain sectors. It could be through credit risk guarantees. It could be through first loss provisions for them. And what you do is you realize that 5 trillion eventually can create maybe about 15 trillion in terms of investment. Because the problem with what Subsidy and FX has done now is that the cost of financing will increase. Imagine if you are bringing in a truck, for example, before, which was like $10,000, and it was at 4 million naira, about 4.8 million naira. Now you're bringing at 8 million. So that's more expensive. And your revenue is not changed because the prices of this transportation will still be the same. So basically have to borrow more to be able to bring in these assets. Apart from that, you have to borrow more to be able to invest. So trying to unlock that capital that helps to allow businesses to fund the assets, would be the major way to cover the effect. Because what you do that, if there's investment, there's more jobs. When there's more jobs, you also have more spending in the economy. And then if you also provide your social programs, then that alone also helps to support the economy. The other part is local content, right? Okay. Local content is, for what has happened now with FX and subsidy, the foreign businesses or foreign competitors, right, have more advantage coming play into Nigeria, because with FX it's cheaper for them to come into Nigeria. If you bring $1 million now, you're bringing about 800 million. So what you need to do is to protect local content policy, and we've seen this in oil and gas sector. Oil and gas service sector today is so sufficient that we're even exporting to other African countries. You have Caverton, you have all these guys, and that's because of the local content policy. So it is time for the government to start to look at supporting local content policy in key sectors that will drive that investment. Technology is one. You have, as great as the businesses or the industries, a lot of businesses in the tech space is outside Nigeria. And so if you have this local content policy, you start to improve capacity investment in that space. And then over time, it supports the environment, you have consumption, you have jobs. And that would quickly remove or cushion the effect of subsidy in the economy.
On the point about the subsidy savings and creating a new fund, what about the existing, what we already have that exists? Bank of Industry, the Small Medium Enterprise Development Association, Enterprise for Nigeria, Development Bank of Nigeria, all these enterprises, would they You're not saying remove them, right? What you're proposing can exist with what's already established. Yes.
Exactly. You can use them, or you can go directly. Okay. Look at let's look at the SMEs today. The microfinance banks are the direct, I would say, funders of SMEs in Nigeria. But the problem is they have a high cost of funds, and so that makes cost of borrowing high. If you speak to any SME borrowers from maybe microfinance bank, interest rate would be from like 2.5% to 5%. And it's not the fault of the microfinance bank. Their cost of fund is high. So if you help them to reduce their cost of funds by bringing in, it could be off-balance sheet funding, that reduces their cost of fund and eventually will reduce the cost of borrowings for the SMEs. So you need to have a different approach to it. The same thing, BOI has done well because, I mean, they go through the commercial banks, but you still need to have that direct funding. It could be asset financing targeted at different sectors. And there are different vehicles or channels in which you can use to drive that funding. Like the same thing with providing guarantee. For example, diasporas want to invest in Nigeria, but there are certain risks in terms of movement of FX back, what sector, what risk, character, and all that. So having those vehicles can help to de-risk, and then you realize that all these funds can come directly well to these industries, and then we can invest. Because what we have in Nigeria, the problem is capacity, right? Assets, and that's why a lot of all these factors affect us, because we do not have the infrastructure to bank it. So if you can help with the funding, then it sort of gives you more advantage. Yeah.
What does a more aggressive social program look like? Does more aggressive mean spending more money? How do you interpret? How do you break that down? It's
not necessarily. Yeah, one is spending more money, but two is also how you spend it, right? And who you're spending it to, and the process in which you are spending it to. And the benefit of that is ripple effect, because if you do it the right way, you also will support the tech industry, the mobile money operators, you support all those other vehicles and directly go into the rural area. So it's the approach that you use to spend that makes it more aggressive.
Yeah. Okay. I think third on our list now, we have to talk about the exchange rates. As far as how to manage this exchange rate liberalization, because in a prior segment, we just talked about the Naira hitting 800. Sorry, yeah. In fact, your example, you even did the conversion of $1 million coming in at 800 million. So how do you manage this? I mean, because there's going to be short-term an impact. Well, I guess folks will say they've already been accessing the parallel market anyway, but still, how would you manage this?
Well, I mean, over time, I think the good thing with what's happening now is that it's an efficient market, right? And supply will find demand, and over time, we will find a good level. I mean, there's really nothing you can do about it from a business standpoint. It's really how you can play with it. Implications have its different factors. So, I mean, for financial services, there might be some recapitalizations, right? So 30% of banks' loans are FX dominated. So what you see is that there's going to be a depletion in their capital adequacy ratio. And so you expect banks, insurance companies to start seeking for capital to raise. But there's also a valuation issue. A lot of today, your valuations will drop across most components. It's good and it's bad, because on the good side, undervaluation or reduction in valuation also makes them more attractive, and we might start to see certain investments coming there. But then the question will be import dependence and also supply. With what's happening in FX today, there will be some level of supply gap in certain industries, because Nigerian goods now become very cheaper when you look at it in neighboring countries, right? So you have supply issue. We've had this thing in 2016 or 2015 where neighboring countries were buying a lot of food produces, and that drove inflation in your country because supply started to move to other countries. So you need to start to help by investing in capacity majorly, because a lot of guys would have to invest in assets, and because of the FX rate, they would have to double what they're buying. And so that's capacity investment, infrastructure, energy and power, and all those things eventually will stop to drive, because we need to reduce definitely import dependence. And import dependence is majorly from that investment in infrastructure. It could be from the government side, but from a business side, it's how then can you invest in it. And it's really, like I said, looking for the right funding, trying to unlock the investments that come into it, and also valuation. So for me, I would say that from the government side is to also make the banks better, because at the end of the day, if the banks are more adequate, have very good buffer, they will be able to support the business environment and the private sector with the right funding. So, like I said, there'll be capitalization issues there. Also, from asset financing, it's going to be expensive. So, government also has to reduce that crowding out in terms of borrowing. I mean, the key thing is that the government is the best borrower in the country, so nobody can borrow higher than that. With what's happened is subsidy, you reduce your revenues, you can leave that local borrowing and eventually can reduce the rates, and that can help people to start to borrow at a low rate. I mean, look at key sectors today. You can't really compete with foreign players, maybe like a Chinese player who can get 0% interest rate and bring assets to your country, and you have to also get FX at 800, and you have to get borrowings at maybe like 20-something%. It's going to be very competitive for you to play, and eventually that has a ripple effect on the economy. So those are the areas that I think that the government needs to tackle: cost of borrowing, funding issues, asset financing, and capacity. And over time, that would drive the levels.
Oh, running out of time, real quick, but the cost of borrowing, because the president said he wants to see lower interest rates, but where inflation is now, that's going to be a challenge, is it not? If you're trying to get your interest rates lower, when you got to bring inflation down basically.
Yes.
Yeah. All right. Strategies outlook for SMEs. You've talked about the government side. What do the small businesses? How do they navigate things now?
Well, really, it's just value chain integration, majorly, right? Because at this point now, size is very important, scalability is important, and how you can sort of have control over your value chain. So it's the best time to start looking at either forward integration, backward integration, start to invest in assets, because I mean, the earlier you buy these assets, the better, because these things are going to go up. So and it doesn't really mean that you have to start a new business across your value chain. It's just to build relationship, consortium, and also look at longer term financing and partnership. That also helps. And then exports, diversification. That is another angle to look at in terms of how you can navigate the challenge, because we're in a place where it's really about margins here. And because prices, even if you increase your price, people are already, suffering from the impact of cost. So it doesn't mean that you might even lose volume. So you have to just look at how you can protect margins, switch from operating expense to capital expenditure, see how you can manage your cost, working capital management, so that you can retain as much cash as possible. If you do that well, and also size, then eventually you'll be able to navigate the environment.
There's a Punch headline today talking about, I think, a 60% increase for students who are overseas. Is there a play for education here, for players here, to say, okay, we can take advantage of the fact that maybe some people won't be able to send children overseas because of FX challenges?
Yeah, definitely. I think investment in education would be a key one, and it's part of when you look at the roadmap. So education, healthcare, key things that Nigerians actually look for abroad. I mean, the opportunities there. And I think it's time for the government to start looking for how to support the education sector, not necessarily by funding it, but by attracting private sector players in that space. I mean, we've seen a PE firm, I can't remember the name, who has stake in an education in a school. And I think that over time we can start to see that, particularly in tertiary education. Yeah, and then also hospitality, tourism. I think there will also be more value. It's cheaper for Nigerians. I mean, Nigerians outside, diasporas, foreigners to come to Nigeria. Yeah. So those investments in tourism helps, because then it also attracts dollar inflows into the country.
There's a tweet from Senator Shehu Sani, where he was talking about Nigeria abandoning the Naira, Ghana abandoning the CD, and a number of countries just adopting a unified, I have to pick your brain on this, unified African currency. Yeah, there's the tweet right there. Is that, I mean, he makes it sound so simple, but is this, what's the pathway to getting there?
Well, it's more political, it's political will. But obviously, this is what we need, not just for Nigeria, but in Africa. Yeah. We have cost of doing business is high, cost of trade is high. Because, I mean, if you look at what it costs you to travel to Benin Republic, to Ghana, it's ridiculous, really. And I think these are the things that can help, because you need to have a coordinated central bank, a coordinated policies. I mean, we are bigger in terms of we have a better bargaining power if we all come together to pull stuffs from trade and co. So it's more political will, and I hope that with the FCTA and with what's happening, if Nigeria can also show that will and influence other countries, obviously it's going to be in the right direction. It will support business in Nigeria, support business in West African countries, and as a whole, we can then start to negotiate better in international markets. Cost of borrowings for government will be high. They can tap more international funding. The same thing with companies in West Africa bloc will be able to tap more funding, and then increase stability in currency across board, because we are just so divided. I mean, with currencies, and different people are pegging their currencies to different levels. You have the Francophone countries pegged to the franc, and you have all pegged to the US dollars, and it's just so diverse, which is unnecessary for a small block like this.
The Afri-Exim Bank, they've got their PAPS, their Pan-African Payment Settlement System. So hopefully that's, they're acting as a middleman to where you can pay in local currencies and then everyone gets settled in those currencies. So we'll see how things work out there. Kayode Omosebi, founder of Cedar and Ash Capital. Thank you so much for joining us. Appreciate your time.
Thank you.